Good evening, folks. TopGun StockTrading.com. We're neither bulls nor bears. We just want to be on the right side of the trade. All right, let's get right into it. Today's action: another slightly up day. Spiders up 50 cents. After that jobs report, mediocre jobs report this morning was put out. The market initially gapped up higher. It sold off and then came back in. I'll show you the 10-minute chart. Uh, Came back in, as you can see, before it flips over here on me. It gapped higher on that report. It sold off and then eventually came back in for a slight positive day, basically back close to where it opened today. Opened at 183.97 and closed at 184.07 on the 10-minute. However, if I go to my daily chart, it closed at 14 cents above that. So 184.14 is where I have the close here. And I talked about this 184, this red bar high bar, getting above that and closing above it. So where he closed above that, so now we're just looking for confirmation and maybe even a close above the high there, 184.69, and I will definitely, certainly change my stance. We still have a nice in spirit of bear flag, so on with a time factor in there. So on Monday afternoon, I'm going to look to short this market via the SDS. Again, I'm going to say I'm going to look to short it, not necessarily guaranteed to short it because I have to look at the price action, see how we're doing. But if all things stay the same, if it's up another 20 cents or so into this green bar here, I will look to short it Monday afternoon because I believe the cycle date's coming in the 15th of January. I believe that's a Wednesday there as well for a minor cycle date to the downside. So if it goes up Monday, I'm going to look to buy the SDS. All right. The weekly is showing. There's nothing wrong with the weekly. It's still above all the moving averages. It's even put in a bull flag here off this move, but as you'll get to know, these bull flags at the tops of charts and bear flags at the bottoms of charts, they have a high tendency of failure. So what I'm going to do is when I put my short in, I'm going to short it. Probably going to be about the 184.50, hopefully. Uh, and then I'm going to use this high as a stop out, a confirmation above that high. So that gives me a pretty tight stop loss, a pretty tight risk for a big reward, lots of downside. Again, this lower here is minor, and I think it can go all the way down to this main trend line here, and maybe even the red one is going to be major resistance there at 177. I have it at 143, but anywhere around that area should be pretty good support. All right. So this is what I think about the spiders going into next week. Monday should be another slight float day. Mondays are usually low volume. Fridays and Mondays are low volume float days. Not a lot of volume going on. So the market has tendency to float a little higher. Tuesday, Wednesday, Thursday are your higher volume days usually, and that's when you get some action, some volatility. All right, moving on to the USO. Oil, as you can see, it came right down into the low on yesterday was 32.68. I had a buy on it at 32.52, so I missed it by 16 cents. So it is what it is. You try to get your best price, and sometimes it doesn't work out for you. Today is more or less a pause day, up 11 cents. So I don't know if I like that 32.52 level anymore, but we'll see what kind of pattern we get here. But I think it might be a moot point because I think oil is going to move higher from here just based on this candle from yesterday, that bottoming tail, especially at the low, at the double bottom here. So we'll see how that acts. But as of right now, I'm going to take off the 32.52 trade for the USO, and we'll see how it reacts. If it consolidates right here and doesn't get that big bounce, it just consolidates, and it's probably going to break through that, build up pressure to break through that lower support trend line there. And I showed you before where that line comes from. Okay, probably my next look to buy would be about the 3073 level. This low down here, this candle made on April 15th, their tax day, 3079. All right, gold today got a gap higher off of that jobs number. So uh, mediocre jobs number uh, means that the Fed will look to stay in the market more, print more. Let's say print more money, but continue printing money. And obviously, if you print more money, then the price of gold, inflation will go up just based on the weaker dollar. All right, so you see gold jumped up there, $1.52. It did have that's the weekly chart. Get you in here there. So you can see it, big gap higher and rose a little bit more after that. So it's right into that 50-day moving average. Nothing to do here, I don't think. I was going to buy the 116 gap fill down below here, but it already gapped higher, so I don't like that level anymore. Is it a shortable level here? Not without price pattern and any type of time factor there. So I don't have any price factors up here other than if it gets to the 100 with this gap window here, might be a minor level, but I'll just have to let gold play out and see how it's going to go. Yesterday I did pick up correction. I did sell, like we talked about, ASTM. All right, this was a small cap play that I told you I picked up probably 2 weeks ago by now. I think it was on December 31st there, New Year's Eve. So I told you my target was 434, just at the top of this green bar high there. The close of 435, and I went a penny under that, 434. And you see yesterday the high was 434, and that's actually I sold at 432. I made a mistake in communicating that to you, but I actually had my sell at 432. So either way, if you had to stop 434, you got out as well. As you look today, it had a fairly good sell-off, down 4.25%. It was even down lower than that, as low as 385. So what do we do about this? It's pretty high volume too. So if we can make this thing can make some kind of a bullish pattern here, maybe consolidate below this 100 and above the 50 and the 20. You might look to buy this thing again at a lower price. Again, we'll let that pattern there shape up to give us that pattern, to give us that buy signal. But as of right now, there's nothing to do here. It was a nice trade. Almost nailed the well, I didn't nail the bottom. 344 is where I bought. It went down to 314, but I did nail the top of that at 434 is what I put out. Another stock that I've been talking about for the last week that I got into at the beginning of the week is CarMax. So CarMax went up 2% today, which is a good sign. I like the action on this. I said this is going to have to make some kind of push before next Monday or Tuesday, or I was going to have to move out of it on a break-even trade. So I was going to have to make its move pretty soon because I was afraid of that bearish pattern setting up. So today was that move up 2%. Nice move. Let's see if it can either have a couple continuation days. My first target's going to be up here at 48.13 on CarMax, and I'll take half off at that point. Be careful. I'll pay attention to this 200 and this 20-day moving average coming in. Where those two cross will be significant resistance as well. So we'll see how that all plays out, what the price action is on Monday and Tuesday. If we get that high, I may take off half at 47.61 there, another 70 cents higher. Just to be safe, there is some resistance here. You can see in previous price action on this equity. There is going to be some resistance right around that 47 level. So we'll keep an eye on it. Again, my entry I believe was 45.22. So I'm in the money, 1.5% on that. So no big deal. This holding is 10% of my account. So we're in the money nicely. Usually when I get in the money this nicely, I'll set a break-even stop, and I'll look to do that on Monday. Just set a break-even stop, and that's including your trading commissions. That way, it is no kidding break-even stop. The only people losing money, nobody's losing money. Your broker is the only one making money, and that's going to be the commission. But any break-even trade is good. And to be honest with you, I'll even set in $5 or $10 even above my trading commissions just so I can buy myself lunch one day. So that's how I play it. CarMax, Bank of America, we said we shorted yesterday. That came into our level. Today was a little weak, down 6 cents. It was even lower than that, low of 16.61. So with the market up 50 cents, up a third of a percent, whatever it was, Bank of America showing a little bit of weakness. The real Bank of America here, J.P. Morgan, was down as well, about 0.46, and then Goldman Sachs is other market mover here. Goldman Sachs actually went up a 0.5%. So it's my opinion these banks, they have earnings coming up, and I told you yesterday we don't play earnings here if we can help it. Of course, we can help it. We'll just trade out of it. So J.P. Morgan has earnings on the 14th of January, and that's the next Tuesday. So we'll be looking to see how that's going to be. And then Goldman Sachs is on Thursday of next week as well. So we'll see how all that plays out. And of course, that's going to affect Bank of America as well once these banks start reporting earnings. Bank of America's earnings are on the 15th, so Tuesday, Wednesday, Thursday next week. One of the reasons why I did play a vertical spread on Bank of America is because the earnings were coming so near, and I wanted to get the trade in because I believe it's at the top and it's going to make a pivot here. So something that takes on less risk is a vertical spread. You limit your downside potential. Your profits also limited, but you're definitely limiting your losses are limited and not infinity, or not however much you put into the stock there. So that's one of the reasons why I took a vertical spread on Bank of America. Another stock that triggered, it's on the website, is DXM. I bought this at $5.98. I believe it triggered yesterday, and it had a nice day, up 2.33%. So we're nicely in the money on that one. It's so close to where our entry price, so I won't set a break-even stop just yet. My stop's down here at this low, confirmation below this low at 5.35, I believe, is going to be my stop on that. Corn had a beautiful day, high volume reversal day. It made a low, so we call this a big outside day when the high and low engulfs the previous day's trading market action there. So this is an outside day. That's a good sign. I like corn here. I believe I bought it at 30.65. So I'm in the money 50 cents or whatever it is. So not that much, but hey, you're in the money 50 cents, and this is a 10% of my trading account as well. So this is going to shape up to be a nice trade. If we can get another follow-through day, keep this thing above the 20, maybe gets above the 50 and starts a bullish consolidation for a move higher. That's what we're looking for in the corn trade. Take a look at the large caps here. Boeing had a slight down day. So what happened there? We said where the stop out point was going to be at confirmation above this high, 142. So it closed below that, which is good. So we'll continue to monitor that. Again, this is a January spread, so we only have another basically next week is going to be options expiration week. So that spread expires by next Friday, so we have to monitor this. My break even on this is 141.72. So it gets below there, it's 141.72 is break even. A price action on the Boeing there, so hopefully it can move lower next week. Speaking of options expiration, it is Shark Week next week. So this is where all the institutions they make their money. So they have computer algorithms that tell them exactly what a price of a stock needs to be for them to maximize their profits on these options. And believe me, they'll move the stock price to that most optimum price in order for them to make the most money, depending on what kind of action is in the options, puts and calls, etc. So it's really a volatile week, and kind of false impressions of what the value of the equity or the price of the equity is, because there's a lot of intervention in these stock prices. You'll see it. You'll see these stocks in this Apple's classic for ending on even numbers, or right on the big even numbers like $500 or $525, because that's where the big money, a big price point is in their options or their strike prices, and that's going to what's making them the most money on that particular week. So next week's options expiration week, Shark Week, and you got to be real careful. Only take trades unless they are, no kidding, multi-dimensional, three-dimensional, even four-dimensional. And I haven't really talked about what dimensions we're talking about here. I've mentioned a lot of time is certainly one dimension, as it is in any other in real life. There's also other dimensions, like you're running an airborne intercept, air fighter running an intercept. You're in three. You have to always be thinking in three dimensions. Running that intercept. Same thing with trading. It's always the three dimensions. You're looking at the price. You find your price point, and that could be support, resistance. You find your time factor. There's certainly certain time factors and time counts. Basically, a time count, just like music has time counts for music to get a rhythm. The stock market has time counts and a rhythm, like nature has a rhythm. It's all based on rhythm. So time is certainly a factor. When time is up, and that's when the stock market or the price of the equity will move. And you'll wonder why sometimes. Why did that stock price go up, or why did the market go down? It doesn't seem like there's any reason. Well, sometimes time is just up, and that's the way it goes. And then the third dimension to my trading technique, I'm kind of revealing a little bit of my system here. We mentioned the price, support, resistance. We mentioned the time factor, and then certain reason why we have these candlesticks is basically these candlesticks are a graph of traders' emotions. Okay, that's all it is. It's all emotion. The stock market is fear and greed. Okay, there's two emotions, and it's bipolar. And this candlesticks are a measure of traders, or the majority of the trader emotions. Okay, stock goes up, greed. Stock goes down, there's fear. Okay, so more people have fear and have greed on this stock. I guess you could argue by selling a stock you have greed because you don't want to lose your money, but certainly I would say fear is probably the most influential emotion when the stock price is going down. Just like when it's going up, it's greed. People buy. You see all the hyper emotion in a stock price. One classic example for today, yesterday, and the other day is ICPT. Look at the price of this stock. I wish I would have noticed this at the beginning of the week. So here you have, in spirit of bull flag, not the most perfect setup, but as you can see, it kind of runs into the 20 there. It jumps up there on the 8th, 2 days ago, Wednesday. It is at 72.39. Well, they come out with this is a cancer pharmaceutical. They deal in cancer oncology. I guess they came out with a stock that cures cancer and is God's gift to the world. So it went from, what do we say, 72.39 on Wednesday. Today it traded as high as 497. The stock went up sevenfold in 2 days. So if you just had 100 shares, $7,000, $50,000 today, assuming you sold it at the highs. That's insane. This right here is all greed. Now, who in their right mind, after seeing this close at 275 yesterday, would jump in today and be buying up here at 378? Greed. Stock market is all fear, greed. It's all measured on emotions. Okay, enough of that. Let's look at FDX. FedEx, I'm in this trade. They went up. This is my red bar high I'm looking at, red bar high 143, so I'm looking at confirmation above the 143 level to move out of this stock. Nice bearish consolidation. Looking for the stock to dump out either Monday or Tuesday. Probably going to happen on Tuesday is what I'm seeing here based on the pattern and the price action. So we'll monitor that. CAT is another one that I'm monitoring very closely. This closed above this red bar high, so we'll need one more day to see if it confirms. If it confirms, I'll move out on a stop loss. Again, I have a spread on this, and that'll be a minor loss. That's the name of the game, is limiting your losses. We'll look at a couple small caps I own, and I believe I've mentioned them before. I obviously don't have them up on the Fox 3 alerts because I got into them before I started those alerts. And it's CVM. I bought this down at 58 cents. I think I mentioned this on the first video I did. I got this at 58 cents. It traded as high as 76 cents, and then today it went down a couple. I didn't even go down a cent, so it's still 69 cents. So I'm still in the money on this one. If it forms some bullish consolidation above this 20, that'd be perfect. I get a time factor in there, a time dimension in there, account there, and then lift off there above the 50 there. So we got the 50 above it, 20 below it. So support and resistance above both above and below there. So we'll see how that acts. Again, break-even stop, mental break-even stop on this small cap, just like I talked about the other day, where you don't want these institutions to take your money. DARA, not much action going on today. Only 713,000 volume there. So and it went up 0.005. So no big move there. Kind of got to watch this because it's peaked out here on the 7th. Bearish inside action right here, so we'll kind of monitor that. Probably going to be next Wednesday or Thursday. I have to make a decision on if we're going to get out of that if it doesn't pop before that. If it's still slight moving up there, I might look to move out of that stock at a small profit there, just because of the pattern that it's forming right now. Dry ships, I believe this is on the Fox 3 alerts there. Nice trade today. I had a 369. I think I got it at 369. Might have been 368. But nice price action on that, up to 386. So up 4.5% on that move with a bottoming tail, almost a bottoming tail action there. So I like the action. It's in the wrong place in the chart to be actually called a bottoming tail, but I still like the price action. Anytime you see a candle like this at the end of what seems like the end of a move, it normally signals the end of the move. So we don't know if this is the end of this down move or not. But if you get a candle like this, a bottoming tail essentially, it certainly is one factor in you thinking that might be the bottom of the move. So again, why did I get in this trade at this price? Because I'll show you the support and resistance here that I got. Let's see, it's about. Let's see, open 360. So yeah, so this is it right here. So you can see some resistance here, back tested. There's a gap right here as well as some resistance there. So anytime you find one line that is both support in one area and resistance in the other, it's usually a pretty good level to either buy or sell a stock. And there's, I believe this had a fib level with it as well. I don't remember, so that would be my second factor, if you will. Don't remember. I think I might have taken it off this level right here. Let's see. I'm doing this real time. It's close to being a 618, and it's certainly a 50% from this level right here. So doesn't exactly measure up on the fib levels, but I liked the pattern. Let me get rid of that fib. I like the pattern. I like the large move up and then the slow drift down, and then I like the level there, support resistance there. So that's why I went there. Bought that dry ships there, and I believe. So we've been talking about gold. Yamana Gold's a minor, and I picked up some of this yesterday. I like the pattern and the price action. So good day today. You can still get into this. 887 is probably a good price to get into this Yamana Gold if you want to set a price, but that's another 23 cents down, basically negating today's move. So may or may not be get down there. Definitely don't chase, and we'll see what we can do on this Yamana Gold with a large, not large, but a significant up move and then sideways consolidation is a bull flag there. I like that move right there at basically old support level, is new resistance level. But it traded above that. It's been trading, chopping around that level. So hopefully that becomes a minor resistance level and it can get up to upwards of the 50 there at 975, and then even top of this pivot, this 200 coming down probably at 1035. So I'll probably be looking to break a 10 just for my first target there. By that time, the 200 will probably be in there as well. Alrighty, folks. That's about all I have on a Friday. Like I said, next week I'll be looking to short these spiders. If we get some slight upside action, another drift higher, like we've been talking about. Let me get this chart in here. So we get this slight drift higher. I'll be shorting it Monday afternoon via the SDS. Now, if this thing jumps up higher above this 184 or and keeps going, obviously I'm not going to short it when it's got pretty good momentum to the upside. And if it opens lower on Monday and it keeps, it looks like it's going to go, I'm not going to chase it to the downside. All right, so I'm looking Monday afternoon. If it's somewhere plus or minus 30 cents of where it is right now, I'll be probably looking to short that. Again, I'll put that out via the Fox 3 alerts this evening. Alrighty, folks, that's what we're looking for. All right, you folks have a good weekend, and thanks for being members here at TopGun StockTrading.com.